All right, everybody, welcome back to another episode here on the Dividend Doggo Show on YouTube, and I am bringing you into a weekly portfolio review. This has been a roller coaster of a week. We are going up to the top of the roller coaster with this week's performance, so we're going to dive straight into the activity because I really want to mention this and appreciate it a lot. We had some dividends roll into the portfolio here. Not a ton going on. You'll see that I have not done any real purchases or anything. I am just collecting some dividends. I expected this week to be a bit more of an emotional roller coaster, but the market actually reacted extremely favorably to the conditions that we have going on here, which mainly people were worried about how much the Fed was going to raise the interest rate. So it went up, 0.25, which is like not a whole lot, although it is sending mortgage rates up. I think that there will be a little bit of a tapering with the housing market, but I think housing prices are still going to be astronomically high. But the main reason I wanted to start with this is I wanted to say that I really appreciate the referral bonuses that are coming in from M1 Finance. This is $100 that's getting reinvested into the portfolio. We had one on the 11th and one on the 18th of March. So if you're just starting your dividend journey, I just want to mention it. I know that a lot of people on the channel have probably heard this before, but if you have not started an M1 account, you can use the referral link down in the description. That will give you $50 for depositing 100, and it sends me $50, which is absolutely amazing, and then I get to reinvest that into the portfolio. And I'm going to try to keep that very short and sweet, but I just wanted to say thank you very much for all of the likes, the comments, the subscriptions, the referral link use, everything, all of the support. The channel growth for me is pretty much beyond my wildest expectations for the channel. This is mainly just a channel dedicated to chronicling my journey to financial independence and retiring early. I am in my 30s. My wife and I basically, we've gone very different directions from where we started, but we were both. I was in telecommunications and tech, and she has always been in tech. And basically we live primarily off of her income while I do real estate investing and property management, as well as a couple other side hustles. So this is kind of chronicling our journey to build up a taxable portfolio, which will act as a buffer. Once we get closer to our 50s, we want to use this account to be a buffer toward us gaining access to our 401k retirement accounts, which we both have. Mine is significantly smaller than hers, but hers is going to continue to keep building up for the next decade or so as well. So this is a bridge the gap account, but I wanted to build this account because I want to achieve something called fat fire. And what that means is that we have more income rolling in from dividends and assets like real estate that will provide us the monthly incomes that we need to basically survive and thrive, be able to donate to charities, adopt dogs, do all kinds of different things of that nature, grow gardens, provide a cornerstone to our little community that we live in now. A lot of you might know this, but we did sell some stock in 2021 to buy a house and some land, and we plan to build that out over the next couple of years. Once we get away from the crazy tax burden that we're going to have, I got all of our tax stuff together last week. So it was a very stressful week. I hate taxes so much. They're so convoluted and clunky. I'm so glad that we hire a CPA to help with this because it's complicated. Taxes are stressful, and it's one of those burdens that I'm happy to have off my belt here. So let's get into the weekly portfolio review. As you can see, this is actually all-time highs. My portfolio here has never seen this level of money in the account. We're at $742,193.59 in total value, of which we contributed $560,000 $720. So that means that our total gains between dividends and market gain are $223,382.41. Of that, $41,909.04 is from dividends collected. And as you can see here, this portfolio was started August 6th, 2019. So we had, the dip of 2020 is right here, and it just blips out because we invested more and more and more and more money every week going up through April, May, June, and just kept going. The way that I did this was I sidelined a bunch of cash from a real estate investment. We did multiple cash out refinances on properties, so we didn't have mortgages on those properties. We had paid them off, thinking that we would just want to build up the cash flow. Our income circumstances changed, and we realized that that was a mistake in going over the statements with the accountant. That it basically rolls out best if we were to, because of our income level, if we were to have mortgages on the properties. So we took that money and we had planned to invest it over time. We got exceptionally lucky with the crash of 2020 and being able to put that money into the market and get it to work in several big stocks that have definitely gone up significantly since we invested in them. So that being said, you can see the overall performance of every sector. Overall, everything is in the green, for all time. If I go into 1 week, which this is the weekly review, so let's look at this. Someone in a video about, I think 2 or 3 videos ago, they asked me what I was planning to do with AbbVie because it is just going up and up and up and up and up. And it is now at the point where it is almost double the value at which we bought the stock. It has increased its dividend by a very significant amount, double digit, every year that we've held this stock. I kind of want to hold it, continue going forward, which might prove to be a mistake, but the yield is so high on this stock now, it's well over 6% for this portfolio. It's yield on cost. That means that every year we're getting 6% back with the dividend on the money that we had invested. I believe that another year, maybe 2, and it'll be in the 7% yield range, assuming that their yield stays the same and continues to go up. So overall, you can see healthcare had an amazing week at being $10,000 up. The consumer pie, which houses about $150,000 of our total portfolio here, is in Mo Altria. That has gone up pretty decently and had a pretty good week. Their dividend is right here around the corner, so I expect this might push up a little bit more next week because their ex-dividend date is coming up, and they pay a very thick, juicy dividend. I believe it's still well over 6%. For starting yield. Don't expect much capital growth with this company as they are having some revenue struggles and things like that. I said that I wouldn't want to put more money into this stock, but it is a very it's a very safe investment as far as the dividend goes, considering the world around us and how much of a roller coaster the stock market is. They own stakes in Budweiser, which is a beer company, tobacco, marijuana, several different investments to this portfolio of, they've kind of built up their own little portfolio of investments over time with the stock. Home Depot had an absolutely amazing week, being 7.5% up after being down pretty significantly over the past few weeks. Home Depot is still one of those core stocks that I absolutely love, and I could see myself likely holding this for a very, very long time, 30 to 40 years, if not my entire lifetime. Coca-Cola is another one of those that I just plan on holding. They had a really good week in recovery. A lot of places here in Washington State are opening back up with the mask mandates kind of slowing down or dropping in most counties. Costco, there's not much I can say about Costco other than, God, I wish I had like $25,000, $30,000 or $100,000 in the stock. It's just a high quality, high tier stock that's going to continue to have great growth. I watch both via their promotions for their credit card and via their advertising, their changes to their online structure and shopping. They're doing an absolutely phenomenal wave of changes across the board to make things better for the shopper in the in-store experience and the online experience. Lowe's is another home retailer. With everyone buying houses over the past couple years, everyone building houses, there's always going to be repairs and things like that. I truly believe that Lowe's and Home Depot both have a very, very bright future over the next couple decades. Target is one I wanted to talk about very briefly because of the fact that Target is a relatively good value right now. And I say that because it had come down pretty significantly. Let's see, I went to 1 month and it was... it's back in the green just slightly. It was in the red for me just a week ago, but this week's performance brought the stock up 9.2%. So this is one that you should definitely watch if you're interested in the consumer staples and the big box retailers. Target is one of the only ones that I own outside of that. Kind of Target and Costco are kind of similar, but not really. I absolutely love Target. They announced that they're increasing employee pay, benefits, all kinds of things to boost up the retail workforce over the next few years. They're going to build that out more, which having good employees that are happy to come to work means that your retail front end experience is going to be better. And if they improve the online experience even more and start offering more promotions through their own Target card, that's going to be absolutely amazing. PepsiCo did phenomenal this week, 5.89%. This is snacks and beverage company. I think everyone knows Pepsi. It's hard to not know Pepsi products. Utilities was a very interesting week. Vistra was down 0.09%. So this was a very flat week. It was up a little bit and then down a little bit. So overall, Vistra was just kind of flat this week. I don't expect a whole lot from them. Their earnings had just, I believe, come out, and then on top of that, their ex-dividend date is right around the corner, so this might get a little bump up this next week, but I don't see it jumping up all that much this next week. Duke was down 1%. I'm not really sure if this was just regular market fluctuation, but Duke is another one of those high quality stocks that I probably should have $15,000 to $20,000 into. It pays a relatively high dividend yield. It is slower growth though because it's regulated more. It's a bit heavier on the regulation side than VST is, and doesn't have quite the management plan that VST has. Now that said, I would not be investing tons of money into VST at its current valuations. Excuse me. It is about $23 a share, and that's getting pretty expensive for me. So let's dive in. We've got finance at 7.16% for the week. JP Morgan leading the way there with 8.7. It's really interesting to me to see Ally and JP Morgan almost up the exact same amount in the portfolio. Side by side, they are both very high quality. I think all of these companies in here are very high quality stocks when it comes to the financial sector with a relatively proven track record. The only one of these that I'm not particularly excited with is Bank of America. I think that they need some restructure work on the management side of things. I would like to see a better plan from them going forward. JPM has possibly the most visionary and epic leader in Jamie Dimon that of all of the banks in America. That would be my top number one pick to be behind for a long-term haul. Basically, if he retires, I'm going to have to be evaluating that stock a little harder. OZK has just been continuing to be a little workhorse. They're still growing. It's more of a smaller regional bank. Hingham is another one of those that's very high quality. It was down just slightly this week, which is kind of interesting because the Fed did raise interest rates, which means that they're going to be making more money from the finance sector. I do suspect that over the next few months, with interest rates raising, this pie I think will actually get to the 110, 120 range, 120,000 in total value, and not necessarily from me investing a bunch of money into it, just because of actual growth over the next 8 to 9 months, the end of the year closing out and going into 2023. I think that with interest rates rising, that is where banks start to thrive. All right, so sorry about that. I had to do a quick edit. M1 crashed me out. The timing sucked on that, but overall, Coma Money was up significantly over the week, 4.04% for SCHD and 4.84% for Berkshire Hathaway. Berkshire Hathaway is another one of those that I definitely want to raise up my stake in this company over time. It's just such a solid earning stock that has so much cash flow coming in that it's absolutely phenomenal. I can't wait to see what they do with their cash flow plan for the next year. I'm still actually working on getting through the report from Berkshire Hathaway. Let's go into tech. Tech for the week, Microsoft was up 7.27% and Apple up nearly 6%. That is pretty amazing. I'm hopefully they're going to be buying back their shares at these lower prices that they've seen. They're significantly lower than what they were just a few months ago. And overall, I'm still very bullish on both of those stocks. Those are going to be two that I tried to buy and hold for quite some time. Overall, the industrial pie, LMT was down about 3% this week. It had a pretty massive run up over the past month. You can see it was up 11% on the month. On the quarter, it's up 24.68%, which is pretty wild. Overall, CAT is bouncing back up a little bit, and Raytheon was up just slightly, barely in the green at 0.6%. So monthly dividend stocks, we have BST. Obviously, if big tech is up, BST is up because they hold large swaths of Apple, Microsoft, so on and so forth, and then they write covered calls against that stuff. This position, I plan on just kind of leaving it at where it is. I do want to get it built up to the point where it's about $50 a month in dividend income, so that it's just about buying a share. I would like it to it's at $43 right now per share. I believe it's earning just over $20 some a month in dividends right now. So overall, I would like to get that up a little bit more, maybe double this position before the year's end, and see if I can get it to the point where it is earning. The problem with this technology trust is that it is heavily managed and actively managed, and that means that you have a high expense ratio. The dividend yield here is also kind of tricky because they did pay out a special dividend near the end of the year, which bumped this up really high. It is not actually a 6.47% yield currently. I believe it's closer to 5%. But overall, I still plan on holding that for quite some time. Owner's Rewards Pie was up 8.4%, Amazon being up 10%. I only hold $60 worth of Amazon. This was not to invest heavily in these companies. This was only to get the credit card rewards from M1 Finance. Some of those companies pay up to 10% back, like Netflix, Spotify, Chewy, GameStop. Those all pay 10% rewards back on the credit card, which is absolutely awesome. I am going to try to get out a video regarding that here relatively quickly. Over the next week or two, I may try to pump that video out and go over kind of why I like that and why I like using it. I believe year to date I've collected around Around $550, I think, total from that, which more than pays for the M1 Plus service. Means that there's no credit card and you get access to the extra trading window. So just having the credit card and using it on things that I was going to likely purchase anyway means that it's pretty awesome to save that extra money. So overall, this is one of the weeks where you just feel like uh, you're a rock star and everything just about across the board in the market, other than a few small stocks, for at least for my portfolio, we're very much in the green this week. We earned dividends of $175.20 this week. We're going to be crossing over that all-time earned dividends of $42,000 here in the next week or so. And it's going to bump up real quick. It'll jump from 42 to 43 really fast because we have Altria coming up here very, very quickly, and that's like a $1,400 dividend payment. So overall, portfolio in great shape this week. What a fantastic week to watch it just go from 714, 725, 732, 738, 742 to end the week. Absolutely amazing. I hope that every single one of you is having an awesome weekend. Hopefully you're resting, relaxing, recuperating, emptying your buckets mentally, and being able to take on all the tasks that you need to get through for the next week. I hope every single one of you is investing and buying something that's going to earn you passive income going forward, building up your asset army, and getting that little piece of mind and freedom from knowing that you're getting some passive income rolling into your accounts. So thank you very much for watching. If you've watched this far, I'd love it if you drop me a comment and let me know what your favorite buy was that you've done over the past month. If it's a company that you're interested in, if it's a product that they sell, drop me a comment, let me know, and let me know one thing that you bought that you found useful in your everyday life. For instance, if you bought a new fancy water bottle that filters your water or something of that nature, drop me a comment and let me know what that is. So thank you very much for watching. This has been Dividend Doggo, and I am signing off here.